Okay, guys, another very quick video recap of all the sectors. So I'll start off very quickly with the markets. Markets are leveling off, in my opinion. We had it's first of all, it's their holiday period, so thin volume. But we did have Nvidia earnings yesterday after the close, which I think they beat, but the market reaction was red, not a big drop, but I think that indicates a bit of a top in Nvidia, thankfully, because I'm still short. I'm underwater now, although I was able to get out of some of my position at the low 400s. But anyway, that Nvidia short doesn't really bother me too much. It's a very small position. And I do feel like ultimately it will come back down at least to my average, which is like 440 at this point. Anyway, Nasdaq, I think, has leveled off and it makes sense. Look at the resistance. We're all the way up here. We have gaps to fill. We have Nvidia that had a red reaction to good news. So that's very much a bit of a topping indication. If we look at the S&P, same sort of pattern. It's not as high, proportionally speaking, but still at a resistance level. Yes, technically it looks okay, but I still think it's closed just below resistance. So for me, and also it was a bit of a red day. I mean, Dow Jones did clear its resistance, but just looking at the other two, that should be enough to take it down. And the Russell has resumed, and actually it never quit being the weakest one. Look, it hit its resistance and it closed pretty red. I mean, it was down over 1% yesterday. So back to being the weakest one. And the banks similarly, okay, they're very strong. Their pattern looks more like that of the S&P and the Nasdaq in terms of this bounce. But they're nowhere near as high as those. And I do think they are at resistance, a bit like the S&P and Nasdaq. And if we look at the more regional, smaller banks like the Russell, they closed a low of day, closed about down 2%, and I think they're on their way down a bit more. So if the market starts to retrace, expect the smaller banks, KB, KRE, and the Russell to lead the way down, just as they started to do. So I think we'll come down in the markets. That's my point. Let's look at the interest rates. The 1 year just grinding sideways. Let's look at the 2 year. I mean, it looks like I've got a bit of support here at 4.8. Let's see if that's enough to bounce. It's still a bit too early for me to tell whether we're going to bounce, but you can see we have a bit of support at 4.8 on the 2 year. Nothing's strong. 5 year, we're curling here, maybe. Very hard to tell where support is for me anyway. I don't know if you guys can tell, but it's not obvious. I mean, yes, 4.36-ish, 4.4 maybe for now, but very weak support if that is the case. The 10 year and the 30 years where I find it easier to tell. And for me, we're pretty much there. You can see it's the last high. It's this line here. It's this resistance. Was it there? Was that the high? And then we breached here, give or take 1 or 2 millimeters. And we're curling pretty much where resistance. So that would make sense. I think 4.4 is kind of support for the 10 year. It is support. So, maybe, and I said this before, because it's so hard to tell for the 1 year, the 2 year, the 5 year, maybe the 10 and the 30 will carve the support for the others. And I think the 10 year was easier to tell, and I think it is here. So if it curls just above where I highlight, then it's the same thing. 30 year also, I feel like it was a bit easier to tell. Again, I wasn't sure exactly where, but roughly here. Maybe the 10 year will create the support for the 30 year also, and we bounce from there. If we do go lower though, in all interest rates, in yield, sorry, then ultimately it will probably end up being 4.3 on the 10 year, because that would end up being 4.5, 4.4 on the 30 year. So, we go down just a little bit more and then start to touch this, and then we should bounce from there, because I don't care what the thesis is fundamentally, and I still think yields go up actually, maybe not to new highs, but go up. There has to be a bounce after a big retracement. So yields are likely to move up in the short term. They could have another small move lower. I think that's my point. DXY, this has come all the way down to the 103 zone. Yes, it didn't hit it, but look, we went to 103.1 something, 103.2. That's good enough. It doesn't have to completely hit. Do we bounce now? Maybe. And if we do bounce, where do we go? Well, resistance is 104.5. Let's see if we make it that high. If we do, it should come back down again, and then we'll see which way it wants to go. But maybe it's going to bounce a little bit. It could find a little bit of resistance at 104. Not just a big number, but you can see it was support for those days. So maybe we hit 104 and come back down. Let's see. But you know, it's come back down. It's come down quite a lot, hasn't it? I mean, look at this, all the way down from 107.5, all the sorry 107, all the way down to 103, pretty much. So that's a big move. Expect a bit of a bounce, but and then it's time to see, you know, which way do we go? Is it all the way back down to the low 100s, or maybe test 105, 107? But DXY has made a decent move down. That's good to see. Okay, but it could bounce, of course. That's not so great. Let's look at commodities. Copper, nice move. So finally starting to outperform because it was really weak down here. Unfortunately, the markets, I think, are going to come down. So maybe we come back down to test this 3.7-ish breakout. So, and the dollar's going to go up maybe. I feel like the dollar might go up and the markets might go down. So combine those two, you could have copper come back down to 3.72. Otherwise, resistance pretty much here, 3.9-ish, I would say. Yeah. So, and I don't really see it going all the way up there with what's going to happen in the markets and the dollar very short term, in my opinion. Natural gas, that just makes me laugh. This ascending support is coming right into it. It's overdone it. It always just screws with everyone's head. So I think it's now retraced fully, this pump. I really, really would be surprised, even for natural gas, for it to keep going down below this ascending line. That would just, yeah, that would really be bizarre, I think. But I expect a bit of a curl here. You can see the candles getting smaller and smaller, and it makes sense for a bounce. So I reckon natural gas really should go back up and start even closing above 3 again, because this is a little absurd. That's my take on natural gas. Oil, got to take this out here. Oil has climbed back to one of its levels, which is 78. Did it close above 78? Yes. Yes, it did. Yeah, well, the same remains true. So which way do we go? Do we go up to the next level, which is 82? And if we do go there, we're pretty much hitting our head on this descending support. Maybe if it was to go a little higher. Otherwise, well, you know, I really was surprised. I think a lot of people were that it went down to 74. 74, it should really be the low. Let me just get rid of these. But if we do go back down again, I expect it to hold 74. I really would be surprised if we come back down and we don't hold 70, which just goes and flushes. I mean, that would be incredible. I think a lot of people would buy that, and I don't think it's going to happen. In fact, I think a lot of people bought this because they're already surprised of the move down. So if we do dip below, it'll probably find a higher low here, you know, maybe above 74. I don't think it'll go below 74. I don't think it'll go below 74 if it comes back down. Otherwise, we hold this, grind sideways, and then move up. And then, yeah, you know, not just 80, 82, but also this descending, very important. We close above it, bam, up to the next level, 91, 90, 91. And then we hit our head on this descending. I think that's pretty clear. Uranium, a bullish for a day, in my opinion. I mean, this is just technically perfect, you know, broke out of this, closed above 28.5, kept on going. We had a retracement day. The markets were a bit red, you know, whatever. The dollar was a little green. I don't think the dollar counts too much, but, you know, it retraced healthy, retested this 28.5, closed above 28.5. Now, I mean, it's bullish. Even if it was to have a couple more red days, it's bullish. It's just very, very strong, almost ideal. So quite a few different patterns can play out, but basically sideways up is the average expectation for me. So, you know, if you just grind a little sideways, make sure it really is new support, and then up we go to 31.5. Well done, uranium. So even on a red day, well done. It's pretty healthy pullback. Gold. Look at this. Nice day. Went straight past 2000. 2010 is resistance. Look, it just stopped there at 2007. So it's all about closing above 2010, 2011. I would prefer above 2011 just to really, you know, conclude that it's above 2010. But it'd be good to close above 2000. Also, quite a few people are expecting that as a big psychological hurdle to overcome. It didn't. It closed just below, so it's still not guaranteed. Nothing's guaranteed, obviously, but it's even less guaranteed. So we could just retrace. And, you know, I think the dollar might go up. I think yields might go up short term. They've come down quite a bit. So unfortunately, I'm of the expectation that we don't close above 2010 for one or two more trading days. Also, it's a thin holiday period, so I don't think any move is really credible yet until all the volume comes back. So maybe it's just some sideways action. I just don't expect gold to really make a substantial move with the holiday period and with the DXY and the yields. I think finding a little bit of support here. So, but you know, if it does go up with them going up, you know, if gold was to close above 2010 with a bounce in the dollar, with a bounce in yields, that would be spectacular because then that bounce is going to fade and then gold will keep going, you know. So, but very good day for gold. Let's be honest, very nice, you know. Silver also very good, closed above. No, it didn't. Sorry. The 24 resistance, even though for me real resistance was around here, you could see why. You can see very recently 24 and big numbers. Also 50-cent ranges are always resistance by default for silver, in my opinion. Every 50 cent or $1, 1 unit increment is resistance. But you can see 24 is the same as 2000, 2010 in gold. So I'm just going to add that level. This one I can delete now actually because the last 3-4 trading days, it's already claimed its close above this 23.6 range. So yeah, this is negated now. But 24 with the new resistance, I don't think that's going to happen unless gold hits 2010, 2011, or even 2000 actually. But again, with what I expect in the dollar and yields, it might just not be capable of doing it. But it's good to see silver climbing, and I don't want to say outperforming gold, but at least not underperforming it. So let's see. We just have to wait. We just have to wait, see what happens to the dollar and yields. But it was a good day, you know, nice test. So $24 in silver equals 2000, 2010 in gold. And let's just see what happens to the dollar and yield. And also the markets. Let's see how the market drop, which I expect to start. Not anything crazy, but let's see how that affects the miners. Let's move to the miners. They had a very good day. And it looks like not only does gold 2000 equals silver 24, but it also equals the local resistance that I've been talking about for some time in the miners. So GDXJ 36, we kissed it, we closed below it. It's a nice gap up. Are we going to close this gap? I don't know. With a retracement, let's see. But we need GDXJ closing above 36. This is what I wanted for some time. This is what we really need to close this low. You know, like I don't want to say double bottom confirmation, but triple bottom W pattern, you know, a confirmation that we're done with this period, even though nothing's guaranteed. And GDX, the equivalent is 30, and we're still not there yet either. GDX is, I think, trailing GDXJ, which is kind of good. It's good to see the more aggressive. It's just like silver outperforming gold, GDXJ outperforming GDX is good. So, you know, we need gold above 2010, in my opinion. We need that close above 2010, 2011. We need that close for silver above 24. To be honest, it'll probably run to 25 very quickly if we have gold up 2011. And then we need GDX above 30 and GDXJ above 36. That's it. But it was a bullish day. Let's see what happens. I'll keep it short. It's a thin period, so happy holidays, and don't count on the trading. I mean, on the moves too much. It's better to see some volume come back for real credibility. But it was a good day nonetheless. All right, have a good day.